Okay, good morning everybody. You're very welcome to this morning's webinar on auto enrolment. I've done a sound check already with everybody, so thanks a million for that. It is possible to increase the volume if you're using a phone device, or if you're using your computer, it's also possible to increase the volume if you're having problems hearing me. Okay, so firstly, my name is Karen Bennett. I'm the marketing manager here at BrightPay, and I've organised all of these webinars that we're running over February and March. And the auto-enrollment webinars are specifically designed for accountants, bookkeepers and payroll bureaus who have payroll clients. Today's webinar will aim to make it easier for you to help your clients with their new auto-enrollment obligations and highlight methods to streamline your auto-enrollment processes. So today we have two speakers. Our first speaker is Paul Byrne, and Paul is the Managing Director here at BrightPay. He is also a Chartered Accountant, having previously spent 20 years in practice. So auto-enrollment is providing the perfect platform for bookkeepers, accountants and bureaus to offer some real value-added services to their clients and increase profits. Paul, after qualifying as a Chartered Accountant, went on to set up and manage his own practice. So this helped Paul understand both the needs of SMEs and accounting practices alike. Realizing that payroll software available at the time did not meet these needs, he set out to provide a solution. In 1991, he went on to set up another company, moving into the accounting and payroll software space. Paul is currently chairman of the Payroll Software Developers Association in Ireland, and he is also a fellow of the Institute of Chartered Accountants. So today Paul will present essential questions to ask your payroll provider. Our second speaker today is Darren Critten. Darren is an auto-enrolment specialist. He has worked in the financial industry for the last 20 years, previously as a senior manager within the retail banking sector. He is a regulated advisor for the last 7 years, focusing mainly on helping SME clients. His experience lies in helping companies large and small prepare for auto-enrolment and reviewing employee benefits. Darren has worked directly with companies such as Specsavers UK and has advised accountants and HR professionals regarding auto-enrolment propositions for their clients. Darren has been recognised by the Pensions Management Institute, having completed their certificate in pensions auto-enrolment in 2013. And today Darren will present auto-enrolment collaboration is the key to success. Now throughout the webinar you're quite welcome to type in any questions that you may have. So there on your control panel on the right hand side you'll have a little question tab there. So if you do have any questions relating to any of the topics, please type them into the question bar, and we'll have like a 5 or 10 minute Q&A session at the end of today's webinar. Don't worry if we don't get to your specific question, we will send you a full list of the questions along with the relevant answers to everybody after the webinar. Now, the good news today is we have a free competition. So the competition is for a BrightPay Bureau 2015-16 license, and we have not one but two to give away today. The competition is open to all attendees who stay for the duration of the webinar. So good luck everybody. I'll now pass you over to Paul, who will present essential questions to ask your payroll software provider. So enjoy everybody.
Okay, thank you Karen. And hi everyone, and thanks for joining us today. Just a small bit about myself to start off. As Karen said, my background is as a practicing accountant. I started my own practice back in the 80s and eventually grew it to a 3-partner practice with 10 staff before moving on to do something completely different and getting into software development full time. While in practice, I provided payroll bureau services for about 30 clients, so I have some idea of what it is like in the front line. A large part of my motivation in getting into payroll software development was to make better software than what I was using at the time. Although I can't claim full credit for BrightPay, which is written by someone younger and better than I, my fellow director Ross Webster. So far the company has grown to 65,000 employers across the UK and Ireland, a figure that we hope to improve on every year. So here's the agenda for my slot today, which I hope you will find informative and give you plenty of food for thought. When talking, I will probably refer to Auto Enrolment or Automatic Enrolment simply as AE. Today's webinar takes a slightly different twist to the previous ones. Rather than focusing on how you can make a profit from AE, today we will look at key questions you need to ask your payroll software provider. So, AE provides a great deal of opportunity for accountants, bookkeepers and payroll bureaus alike. By offering AE as a chargeable service, bureaus can add additional revenue streams, provide added value to existing clients, and increase the possibility of bringing new clients on board. However, before you can use AE to your advantage, you first need to streamline payroll and AE tasks by making sure that your payroll system can handle all the requirements of AE. You will need appropriate software to help you correctly identify the duty you have for each of your clients' employees. This webinar will highlight key questions to ask to simplify the AE admin process for payroll providers. Once an employer reaches their staging date, the workforce must be assessed to determine which employees are eligible job holders, non-eligible job holders, and entitled workers. You must know who needs to be automatically enrolled into a workplace pension scheme. Even if there are no eligible job holders for enrolling automatically, you must still determine the employee's worker category, as different communications are required for each worker category. Even after the staging date, employees must be monitored at each pay period in case an entitled worker, for example, becomes an ineligible job holder, meaning they need to be automatically enrolled. Assessing each employee's age and earnings manually would be extremely time-consuming and monotonous. A key feature to look for in a payroll software system is the ability to assess employees automatically and notify you when you have AE duties to perform. When an employee requires enrolment, it is important that your payroll software can enroll employees quickly and easily. If you have a number of clients with many employees, an ideal feature is batch enrolment, so as to allow you to process multiple employees at the same time, saving you time and effort. Employers have the option to postpone AE for one or more employees for up to 3 months. The key reasons for postponement are to avoid enrolling employees who may have a temporary rise in earnings, to align assessment dates with pay reference periods or accounting periods, or to allow for temporary staff who you may not wish to enroll because they'll be leaving before the end of 3 months. Apparently, some employers believe that if they choose to postpone all employees for 3 months at their staging date, then nothing needs to be done in that 3-month period. This is not the case, as all employees must receive communications within 6 weeks of the staging date relating to postponement and explaining when they will be reassessed. If this communication is not issued, then the postponement effectively never happened, and enrolment must be completed retrospectively back to the staging date, which would in itself be a nightmare. It is vital that your payroll software can handle postponement. Whether you wish to enroll one employee or all employees, you should be able to choose a postponement date within the next 3 months and receive notifications when this date comes around. The software should be able to handle the additional communications required because of postponement. Once an employee has been enrolled, they have the option to opt out of the workplace pension scheme. If an employee chooses to opt out within 30 days, they are entitled to a full refund of contributions made. It must be the employee's choice alone to opt out. The employer must never try and sway the decision in any way. You must make sure that your payroll software is able to process opt-out requests and refund the contributions to the employee. Employee communications is an important employer responsibility and is often considered the most challenging part of the process. There is a range of information that employees are required to provide to all employees, not just those who are automatically enrolled. Varying information is required depending on the employer category. It is the employer's responsibility to ensure that the right person gets the right information at the right time. When postponement is used, additional communication duties come into play. It is up to the employer to notify eligible job holders that they are using a postponement period. Excuse me for a second. Not all payroll software providers are handling AE communications. In my opinion, it is just as important as all the other AE features. Good payroll software will easily produce interactive and personalized letters to provide your clients with the relevant communications for their workers based on each employee's individual eligibility. Another useful feature that you should ask your payroll software provider about is reporting. Some payroll software packages allow flexible reporting, which is a very useful feature. Simply customize the information you want to see, save report templates, and open multiple reports side by side. Integration with AE pension providers will also be a key consideration to think about when weighing up the various payroll solutions out there. It is critical that your payroll software is integrated with your chosen pension provider. Each pension provider requires contribution files in different formats, and so choosing payroll software that caters for your chosen pension provider will avoid complications that this may cause. If you are changing your payroll software provider, beware of hidden costs that they may charge. With some payroll software providers, you may have to pay additional costs for AE functionality, for support, and for additional employees. Make sure you know of any additional costs you may be faced with throughout the year. The pensions regulator recommends that employers and bureaus choose payroll software which is specifically tailored to AE. It is important to check with your payroll software provider to establish how it handles AE, and you should test it well ahead of your staging date to make sure it works. Appropriate software will allow you to streamline AE processes and increase the return from payroll clients. If it doesn't have the required functionality, or if it won't be ready before your client's staging date, you may wish to consider an alternative software package. Whatever payroll software solution you choose, even if you are changing payroll software, you should ensure that it is compatible with your existing systems. It is also advisable to make the change from the start of a payroll year, thereby avoiding any possible complications of a mid-year change, for example, importing cumulatives, ensuring RTI fields are correct, etc. So now for the shameless plug. BrightPay is an easy-to-use payroll and AE solution that can do everything you need to provide a profitable AE service to your clients. The software has been designed to take all the grunt work out of AE. And with BrightPay, AE is easy. It makes the AE process effortless and uncomplicated for small business owners and bureaus alike. With BrightPay, you can benefit from unlimited employers, unlimited employees, free phone and email support, and all for just £199 plus VAT per annum. You can also benefit from a 60-day free trial, which has no limitations to the software. I'm just going to hand you over to Rachel, who will just give you a quick 2-minute talk showing you just how easy AE should be. In this example, we are assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case, say, if in this example, Nest. Registering with Nest should only take 30 minutes on average to complete. I imagine that a lot of small employers, now Darren might have different views on this, would probably choose Nest because it is government backed and has a mandate to accept all employers irrespective of their size. Having said that, BrightPay will also accommodate the People's Pension, Now Pensions, Scottish Widows, all of which are great schemes, and this list is constantly being added to. So thank you, Rachel.
Thanks, Paul. Hi everyone. So today we're going to have a look at a company who's set up in BrightPay, who's set to stage on the 1st of May 2015 and who's using Nest as their auto-enrollment pension provider. Today I'm also going to do the demo using BrightPay 1516, which is now ready for download from the BrightPay website. So as soon as your staging date is known, this must be entered in the new dedicated pensions tab that we have created and in the designated field provided. This is to ensure that on-screen auto-enrollment alerts start up at the right time for you. Setting up a pension scheme is also straightforward in BrightPay 1516 and can be done in advance of your staging date. Within the Pensions tab, simply click Add New Scheme and choose the relevant pension provider from the listing. So using Nest as our example, you must now enter your employer reference followed by your group name. Here we also have the option to add additional groups if required and to amend the contribution rates of employees who will be enrolled in this particular group. When ready, select Save to complete the setup. As soon as you reach your staging date in the payroll, BrightPay will automatically assess which employees are eligible job holders, non-eligible job holders and entitled workers. You will see on-screen flags and alerts appear to notify you that you have auto-enrolment duties to perform. These alerts will bring you through to the relevant options available for the selected employee's worker category. So here we see that Alice Barber is an eligible job holder, which means we have the option to enrol her in a qualifying scheme, postpone her for up to 3 months, or mark her as exempt if applicable. So here we're going to enrol Alice, and you must now choose the relevant group you want to enrol her into. When ready, select Continue to complete. Once enrolled, BrightPay will automatically prepare the employee's enrolment letter, which is ready for printing or for exporting to email to the employees. Here we have an extract of Alice's enrolment letter, and this will include details of the staging date, her contribution rates, her option to opt out, and general information about auto-enrolment and how it affects the employee. As soon as an employee has been enrolled, joined, or opted into a pension scheme, BrightPay will automatically make pension deductions for the employee going forward. These deductions can also be seen on the employee's payslip, which is also ready for printing, exporting, or emailing from directly within the software. BrightPay can also create the enrolment and contribution files for upload to the pension provider's web portal. With the click of a couple of buttons, you'll be given the option to save the file to a location of your choice, ready for upload as required. BrightPay can also create the contribution files for Now Pensions, the People's Pension and Scottish Widows, with more planned for future inclusion. A new feature that's available in BrightPay 15.16 is the option to process more than one employee at the same time. You will see here that when enrolling one employee, you will be given the option to enrol multiple employees with these settings. Simply tick the employees who you wish to enrol and select OK to complete their enrolment. In a similar manner, you will also be given the option to batch print the enrolment letters of these employees. Likewise, batch processing is also available for postponement and exemption if applicable. So that completes the short demo for today, and if anyone would like a more in-depth demo, feel free to contact us. I'll now pass you back to Paul to finish up.
Okay, thank you for that, Rachel. So here's a summary of the essential questions to ask your payroll software provider in relation to AE. Whether you're speaking to your existing software provider or selecting new software, you should ask if the system can assess your workforce, allow the use of postponement, automate employee communications, calculate pension contributions, handle opt-ins and joinings, handle opt-outs and refunds, notify you when actions need to be taken, keep records and provide reports, and integrate with some or all pension scheme provider systems. So before I pass you over to Darren, if you did have any questions in relation to BrightPay and AE, please type them into the chat bar now so we can get through as many questions as we can in the Q&A session. So I'm delighted to pass you over to Darren, who will present auto-enrolment. Collaboration is the key to success.
Hello everybody, good morning and welcome. Can everybody hear me okay? Good. So my session is going to be about collaboration. To BrightPay and Karen for asking me to join you today. I know that all of the previous webinars have been very well received and very worthwhile, and I'm hoping to continue that theme with my session. I'm going to try and share my thoughts with you today and bring some real value to you about how and why it's good to collaborate. You may have seen on the invitation to the webinar that I mentioned that financial advisors tend to be very good at selecting pensions and talking to staff in the workplace, but not quite so good at payroll. You guys, excellent at payroll, but then again, you need to have a financial advisor license to start talking about pensions. So let's run through my slides. I'll try and take this as slowly as I can to run through so it's easy to understand. The picture of the aspirin is there to represent the fact that we're going to be able to take a lot of headaches away for our clients, and they are going to thank you for the service you're going to provide. Okay, so the reason I'm smiling there is I'm being told to smile a lot more, okay? I am a financial advisor by trade, and I'm a specialist financial advisor in the fact that I've taken the Pensions Management Institute, just going to try and find my webcam here, Pensions Management Institute's paper on automatic enrolment. And that is basically designed to give people that achieve that exam a good understanding of the obligations for the employer, help them with effective implementation of qualifying schemes, and make sure that they really know and understand the reality and the theory of automatic enrolment. And I think it would be a good idea if any of you out there would like to read up on this subject. This is a very good way of moving forward. So what I do is I actually help employers with AE, and how I do that is I actually break down the theory into practice so that it's easy to understand in the workplace. And the reason I do that is because I firmly believe, I mean, a couple of my members of my family run businesses, I really do believe that employers are going to be struggling with this. So I passionately believe that advice should be for everybody, and employers should have access to that advice. And I also believe that employers may not have that luxury unless they deal with someone that can help them. So as a thank you for listening to my session, there's going to be 2 one-hour consultation sessions available to win. The aim of this session is I'm going to spend an hour with you to help you devise an AE proposition for your own practice or bureau. So what I'm asking you to do is answer a question for me, which is going to appear on one of the slides coming shortly. And I'd like you to answer the question using the question bar on the right-hand side of the screen. And the question is, how many parts make up the AE value chain? Okay, so why collaborate with professionals? How and why the automatic enrolment value chain can work for you, and what should your proposition look like? I think we would all agree that there's information overload out there. Lots of useful guides from the regulator. Guides, there's 15 guides numbered 1 to 12. Now where else could that happen? But 3 of the guides are numbered 3A, 3B, and 3C. They are quite clear. There's probably about 103 hours worth of reading in there, and it's not for everybody. Each of those guides is 20 pages long. I'm not going to go through this in great detail, but we're covering things like staging dates. This will be very important for your practice, and I'll explain why in a moment. We've got the concept of job holders and entitled workers. We've got the use of postponement. There are 3 different types of postponement. You can postpone all of the employees, some of the employees. You can do that at different times. We've got the concept of pay reference periods. We've got differing contribution structures to consider. We've got statutory communications to write, i.e. letters to address. We've got enrolment and re-enrolment. We've got opting in, opting out. There are record keeping requirements. Information's got to be given, and of course there are rules on safeguarding workers as well. All of this can be easily handled with the right person and the right payroll software. So let's look at this quickly from the end employer's point of view. The pension regulator's website is an excellent source, or is the main source of reference for this, and they give an 8-step process, and they make it look very, very simple. And you can drill into each of these points one by one, and you can spend the time to understand what's actually being required. There's even a new checklist available now, which is starting to group some of these tasks together, so you can form a checklist, and you can use that going through. My view is that although the pensions website is excellent and there's lots of tools and calculators, I don't think that the end clients will be able to sort this out themselves. I think they may start the process, but I actually think that they will not have the inclination to follow through, which could be anything from a 12-month to a 6-month process. Clients are turning to advisors for help. Now, they need you at this time more than they ever have done before. So we're in the position now where we can add real value. The first thing that the employer has to do is nominate a point of contact. Many employers are too busy to act. They don't understand pensions. They don't understand the importance of the timeline that they're involved in. This is the reason why the pension regulator has actually written to all clients now. This is a copy of the letter. You may see on the letter they generate a code for the employer, the 10-digit code and the PAYE scheme reference. Together with those two pieces of information, the client is needing to liaise with the regulator to actually provide the right point of contact. This is something you may be able to help with. Once the point of contact has been registered, and incidentally you can be a second point of contact for the client, and I think that would be very worthwhile. When the point of contact has been registered, it's all about the staging date. And as we know, most clients perceive this to be too far ahead. They have other immediate priorities. They are busy people. But what I'd like just you to be aware of is that your client may be staging in a period that's your busiest period, i.e. the end of the tax year, the end of the financial year. So my question would be, how many employers can you help stage in January? Now there may be some opportunities to help you smooth out the workflow and the workload later on. And we'll look at a timeline because I believe you're going to be involved in this and I think the client's going to want to help you. You may not be able to help the client at certain periods. This is a wake-up call to basically start planning the clients ahead. Once the staging date has been done and you have a timeline of when your clients will stage and you have a clear picture of when this actually happens and you can plan your own workload, we need to start thinking about assessing the workforce. Now from the employer's point of view, they're not going to understand this. They do not know how to do this. They will have not got this far. We've got complicated titles, who is an employee, who is a job holder, non-eligible job holder, entitled worker. How would they possibly assess this? Whilst we may know that there are 3 sections and there are 3 populations of staff, it can be quite difficult to actually explain this to the end employer. And all of these opportunities are opportunities for you to add value to your client as we go along. Reviewing pension arrangements. We're getting to the stage now where many of the employers that you deal with will have an old stakeholder style pension and probably got no members in the pension scheme. But most of them will probably think that they can use the existing pension. And as we know, this is not true. The older style pensions need to be made qualifying. And the providers of the pensions out there want the new style pensions to be on their new computer systems. And incidentally, they want to take advantage of the market. So it's not unusual now for providers to be charging for pensions. It can be difficult getting the right advice from pension providers. So this is advice that needs to be had and it's difficult to get hold of. All this leads up to why you should work with a professional. If you have any employers that have managed to get this far, they've then got to communicate what's happening with their workers. Generally, there is a lack of knowledge of pension awareness out there. It makes it very, very difficult to actually explain and communicate. Automatically enrolling, well, they just simply need you for that because it starts and ends with payroll. With all that in place, the arrangements need to be registered with the regulator, and that happens via a government gateway. There's a 19-point checklist available. This is one of the reasons why employers fall foul of the rules and start getting compliance notices and fines, because they may have done they may have enrolled properly, done everything they need to do, but they've had difficulty actually telling the regulator what they've done. So why not think about offering to do this for the client? I think they would welcome this. Most clients will have already given up if they haven't already. So we see the headache that's available for the clients along the line. Now I'm going to look at how we can actually take those headaches away and add real value by introducing you to the automatic enrolment value chain, i.e. what does your proposition look like? I believe, with the competition in mind, that there are 8 opportunities to help clients. They're arranged in the boxes below. Let's look at these individually, one by one, and very, very quickly I'll give you some ideas on how you can help the clients. Have a think about what services you can already provide in-house. You may well be able to do some of this. Have a think about the best way that you can add value at each step. Because if you get every step right, the client will really value the proposition. And have a think about who you could work with if you can't achieve any of these. Step number 1, assessing the workforce. You could offer to issue an initial assessment for your client. You have the payroll details. You could tell them who their eligible job holders are, who their non-eligibles are, and who their entitled workers are. This would be valuable information, and this could be the start of the proposition. You have to be a little bit careful though, because there are some obscure rules around directors, 0 hours contracts, agency staff, self-employed contractors, and the most popular question I get is, do we include the part-time cleaner? Okay, so you need to be an automatic enrolment specialist, or at least have read the rules around assessment of workforce to understand this. So I think the report could probably be issued on a generic basis, and these questions could probably be answered on a personal basis, one by one. And you could charge for this report. The second thing is agreeing the contributions. So again, if we look, sorry, we're going backwards. If we look at the actual choices available, clients can choose from having their earnings assessed by qualifying earnings, by basic pay, by total pay. And your report could actually calculate the costs going forward for the client. And you can help them choose which of those bands they want to be. We're getting to the stage of the market now where the micro-employers are probably going to be wanting to choose qualifying earnings, but that might not necessarily be the case. But at least you can tell them their costs, what their costs are now, what the cost might be in the future. Now in your report, you could have found the staging date for your client, and you could actually explain in generic text what happens, how the changes affect them, what they need to do before, during, and after the staging date. You could also remind them what happens if you don't comply. Although the fees can be quite scary, there are 169 employers out there that have had fees levied to them by the regulator. This is a copy of a report shown on your screen. They're easy to produce. It's just about having the right know-how and software. And this is a vital piece of the jigsaw. Next we come on to the thorny issue of selecting the provider. Now, Paul has touched on this before about making sure that you have the right provider in place. I feel that most accountants and payroll bureaus feel uncomfortable with getting into scheme choice. Now, the act of selecting the provider is actually not a regulated activity. So you could say, we have selected, for example, Nest, and that's just an example, and it is compatible with our payroll, and here are the details about Nest. What you cannot do is say, we have selected Nest from all of the rest because by doing that, you're actually giving an opinion, and you're making a recommendation. And when you're making a recommendation, you cannot do that unless you're regulated and you're a financial advisor with that license. The regulator is keen to make sure that this doesn't happen, so they want you to be clear on what you can do and what you can't do in terms of selecting a good pension scheme. People, but they're actually there to give the end employees a good outcome in retirement. So the end employee will have a pension where the employer realises that the scheme has got simplicity, good value for money, the communications are clear, and the investment options, including the default fund, are going to give good outcomes for their retirement. Now, all of the providers that you see on the screen will do this. Some of them go about things in a different way. I mean, I know who I would rather have my pension vested with. So I think this is a good opportunity to liaise with an advisor to actually do some due diligence about which provider you're going to use. Obviously, it's got to be compatible with your payroll. That's the key thing. But what you wouldn't want is questions asked of you later on. Why did you choose this provider? If you had a due diligence pack in your office which covers that, that's a good thing to do. Next thing is engaging staff. Okay, so again, there's a guide from the regulator, what you can, what you cannot do. There are different types of statutory communications. Software such as BrightPay will actually select them and tailor them and provide them for you, so you don't have to do that. You do have to give scheme information. I think actually it's best to engage and educate the staff and for you to be able to answer pension questions, because that is the key. And when all of this new stuff happens with employers, this is what tends to happen. There's pension questions to answer, and you wouldn't want lots of employees and employers asking these questions of you. Probably best to defer that to an advisor. The key thing about this getting a process right, and this is the enrolment phase. If you don't mind, I'm going to basically just let you know, and I know you already know this, the payroll process has changed. It starts and ends with payroll, and it's every payroll. So let's have a quick look at the process as far as the regulator is concerned, and let's have a look at this and try and break this down into pieces. It all starts with a payroll run. All starts with a payroll run. When payroll is run, the data needs to be assessed. Once the assessment has taken place, the results allow you to enroll the staff. Each of the categories are worked out and letters are sent to the workers and instructions are sent to the provider. Once this is done, the rules of the scheme that you've selected go and they are calculated, and the pension provider is aware of this. The calculations are fed back into payroll, i.e. in the form of instructions, and the payments are made. It looks very complicated, but in actual real life it happens very quickly, and it happens with good software seamlessly. Okay, one last thing to talk about before we close this off is about the opt-out process. The employees can opt out of their pensions in the first 30 days. But the employer cannot handle the opt-out notice, or cannot be seen to be influencing the member staff to opt out. It has to stand back. It has to be at arm's length. So the question is, how does the employer have an opt-out process? Again, the answer to this lies within the software. Record keeping, yes, records should be kept. Opt-out records should be kept for 4 years, and other records should be kept for 6 years. The software, again, will in the main provide record keeping facilities for you. When all of this is done, contributions need to be made, and this is where payroll is operated. So I think the 3 key areas of the AE advisory chain are in the middle: selecting the provider, engaging with the staff, and getting the enrolment right. That's what I believe. I also believe this is best done with a specialist, preferably a financial advisor, and preferably a financial advisor who's a specialist in automatic enrolment. You need to work in partnership, because obviously the advisor will not be able to operate the payroll. None of this is possible without modern software and technology. So why collaborate? it's obvious. Enables you to save your own time by not getting involved in the nitty-gritty and the pension detail. You focus on your own core activities of what you're doing best. You reduce your own costs and your overheads. You protect your client relationship, because if you're not offering a AE solution, somebody else will be. Your client will be looking at that other offering. And the right advisor can actually add real value to your business. And that's the key. The right advisor can add real value to your business. In summary, what clients want is compliance, and that is only possible when payroll and pensions merge together. So my next steps for you: write to your clients now, let them know that you're open for automatic enrolment. Find their staging dates and prioritize those staging dates in your own timeline so that you know who you're going to work with and when. Publish your proposition and tariff, and why not make this that the clients will have to opt out of your service rather than make it optional. My last top tips are: use fast and efficient software, be clear on your service, and be firm on your price. My contact details are displayed. I use LinkedIn mainly to communicate, but there's also my mobile number, my website, and my email address, which is my personal email address for you guys today. Thank you very much.
Thanks, Darren. Thanks a million. Okay, guys, we'll just take some questions now. So, Darren, a few questions came through for yourself while you were speaking there, so I might just take your questions first, and then I'll ask Paul his questions. Okay? Okay, so how far ahead should employers be planning for auto-enrollment?
Okay, well, there's a range of different software solutions out there which make the planning a lot easier. If you were to ask that questions of the pension regulator, they would tell you that you should be thinking about this 12 months before your staging date and have a pension lined up and a payroll software partnership, so payroll and software 6 months before staging. The reason they say that is because it's good to do some testing in real time before your staging date. So the regulator is saying 6 months. In reality, clients are going to leave it a lot later than that, and I think if you already have good software in place, you could probably cut that down, say, to 3 to 2 months.
So another question just came through. How would you work with an FA as Darren? I presume that just means how would they work with yourself?
How would a financial advisor work with me?
Yeah, I think so. Well, I might skip that because I'm not sure if I understand the question correctly.
Okay.
So how much time is added to payroll, the payroll workload with the auto-enrollment duties?
Okay. I have sat in lots and lots of clients' offices where they're running payroll in-house. Some of them are using different providers. There's a range. I think if you get the software decision wrong, this could actually double the time that you spend processing payroll, at least double. I think if you get the software right, I think it could possibly actually not actually add any time at all to the payroll processing, and maybe even save a little tiny bit of time if you get the software right.
It's probably just a staging that will take time in that case.
Okay. I think you kind of covered this a little bit in your presentation, but can payroll or accountants recommend pension providers?
Yeah, it's an area which is not regulated by it's not financially regulated. So you can select a pension, but you can only ever give details about it. The grey area comes with if you're going to actually recommend a pension. So my advice would be, if you're not a regulated financial advisor, invest in a piece of research which makes that recommendation for you, and then use that recommendation and pass it to your clients, but don't make the decision yourself.
Okay. I might just take one final one for yourself, Darren, because there's quite a few other questions as well, just surrounding Paul's topic. Okay, so assuming that a suitable pension scheme is chosen, but does not perform as well as others in 20 plus years, is the employer responsible for not making the right decision in hindsight?
Ooh, right, well, the employer is actually responsible for knowing about that scheme and also having a regular review. So any good provider out there will be issuing notes about how the funds are performing on a real-time basis. So the best practice here is for the end employer to have an annual statement, annual review, and to understand the pension, how it's doing every year. Now, that's an easy thing for a financial advisor to come and deliver, but the employer should really be keeping a very, very close eye on this pension. Should not just set a pension up and leave it for 20 years. Every year should have a review.
Okay, great. I might just take a few questions now for Paul. So if a small one-man limited company, oh yeah, sorry, excuse me, I'm just going to put in our microphone just because the sound is a little bit better. I won't be able to hear you, Darren, for a few minutes, so just bear with us, okay? Okay, so sorry, just go back to that question. Is a small one-man limited company paying 10K per annum, do they need to communicate auto-enrolment?
Okay, the answer to that, yes. Although if it's a one-man director company, they wouldn't be obliged to auto-enroll in that case. Do they actually do the communication?
I'm not too sure.
Yeah,
actually.
I'm not 100% sure now. Probably Darren would know the answer to that one. Maybe when we get him back on the sound, we can ask him that.
Okay.
I think the communication is required in all cases.
Yeah.
You know.
Yeah.
And BrightPay can do it, which is the answer to the next question.
Okay.
Can we email the letters? Well, okay, it's not as automated as our pay slips. We are looking at that as an additional feature throughout the year. But at the moment, you can export a PDF and then attach them to an email and send to the employees that way. Okay.
Okay. Does BrightPay have CIS?
Well, CIS isn't an integrated part of BrightPay, but we do have a program called CIS Assistant, which we are providing free of charge to all BrightPay customers with effect from the start of this tax year.
Okay. How much would an accountant charge for auto-enrolment?
Right. I think myself and Darren will probably have different views on this. To be honest with you, I don't really know. I suppose I can only give the example of one customer I was talking to who had a 15-employee client, and he was charging them £400 to cover the additional tasks that was involved during staging, and then had increased this payslip price per payslip from £1 to £1.50 to cover the ongoing duties, and the client seemed to be perfectly happy with that.
Okay. Can emailed payslips be password protected automatically in BrightPay?
Yes.
Yes. Okay. Can you use BrightPay before the start of the tax year?
I think what they might mean there is can you use the 15-16 program before you finish off 14-15? And the answer to that is yes, because they're effectively two separate programs using two different files.
Okay. So I might wrap things up there, guys. As I said, we're going to send through a list of all of the questions along with the relevant answers to everybody after the webinar, and we'll also send the winners of the competition. So thanks very much for your time. If you did have any questions for either myself or Darren, the contact details will be on the email as well. So thanks a million, everybody. I'm just going to log off now and enjoy the rest of your day. Thank you.